And good morning, everyone. Welcome back to NeelyFX. My name is Michael Neely, and this is the channel where I talk about foreign exchange trading, prop firm trading, making EAs, expert advisors, that is, for the MetaTrader 4, MetaTrader 5 platforms, and doing a lot of other things that we make money on, hopefully. Hopefully we make money on them. It is certainly not a guarantee. However, if you're skilled enough and patient enough, it can happen. Let me see. What do we have today? First, it's Wednesday, April the 8th. We have some very interesting things to talk about today. First, let's talk about we're going to need to talk about one thing. If you like this video, I want to remind you, if you like this video, go ahead and hit the thumbs up button. Don't be afraid, it's okay. And if you want to subscribe, I don't bite. Please subscribe to the channel if you want to know when more videos are coming out. So check that out too. Lastly, we have something to talk about. Since we're talking about putting money at risk, we need to talk about the risks, and you need to know about them. This channel is for educational and entertainment purposes only and does not constitute trading or financial advice. I'm a professional trader, not a broker, trading my own capital. I do not solicit funds, manage client accounts, nor do I hold CFTC or NFA registration at this time. I have held NFA registration in the past. Forex trading is highly speculative with a high risk of losing some or all of your investment capital. Only trade with funds you can comfortably afford to lose. And for the CFTC risk disclosure, it goes something like this. Forex trading carries a high degree of risk and may not be suitable for all investors. The high degree of leverage can work against you as well as for you. Before trading Forex, consider your investment objectives, experience, and risk appetite. You could sustain a loss of some or all of your investment capital. So I guess next is the thing to do is to figure out what is going on today and see how we can make money from it. So let's go to the Forex factory lesson of what's going on and look what we have here. We have Iran accepted Pakistan's 2-week ceasefire proposal. So Pakistan pretty much saved the day yesterday because I think we were ready to lock and load on that. Well, the United States was. I wasn't. I'm not affiliated with the military, but I was a long time ago, and I know what we can do. Let me see. So what do we have going on here today? We have the FOMC Meeting Minutes right there. They're going to talk about what they said, and that'll be interesting to see what they're going to say. I mean, I think it's more of a nothing burger, but it might move the markets to try to figure out where the Fed is going with things. Here's the easier way to find out. And here is the writing on the wall right here at FedWatch. This is actually a traded contract, believe it or not. We need to know that. There's a 98% chance of a hold and a 1.6% chance of a rate hike. I don't think we're going to see a rate hike. There's a lot of pressure on the Fed not to raise rates because it increases the debt service on the national debt, which is in the trillions. So the largest line item budget in the U.S. in the U.S. government these days is interest payments. Who do we owe the money to? I'm not sure. That's well above my pay grade. But at any rate, as one would say. So here's how I did on the Investors Challenge, or the Traders Challenge. I forgot to place the trades yesterday, which would have erased all of this, but that's okay. We'll have other opportunities to do that. Let me see. What else we got going on? Talked about that. Let's see what's going on today. So right now it is risk on, which means stocks are going to go up. In theory, gold will be going down, but gold is not going to be going down because of the debt situation going on. And here are the strongest and weakest currencies at the time. We have the New Zealand dollar on top. The chef, or the Swissy, is following second. The Great British Pound right there. Aussie, Euro, and then followed up, trailing the entire batch of them are the JPY, the Canadian, and the dollar. Japanese yen. Canadian dollar and the US dollar on the bottom. Why? Because I said if peace broke out, we'd see that reverse, and it did. Bitcoin has taken off. It's not really taken off. It's up a couple thousand, but not enough to really set anything on fire. As a matter of fact, it's down this session right now. So everything's kind of snapping back right now. If you'll notice right here, that's the 10-year yield. That's the thing we got the gap on. Okay, I thought we had it on the DXY too. Do we have that gap on the DXY? But look at that gap down on the 10-year yield. that is quite impressive, and hopefully it'll continue to follow suit and get under 3%. So maybe we will see a rate cut, which would help the debt service, help the country. There it is. Look at the DXY right there. It didn't just fall out of that. It didn't just break out of that pitchfork yesterday. It fell completely out. Got a huge gap. I've never seen that before in all my trading experience. I've never seen a gap like that in the DXY, and maybe because I wasn't paying attention to the right levels. But TradingView also tends to hide gaps in between sessions, but this one was just a massive down with that. So it's a total breakdown in the DXY, which is fine because then that means a break up of a surge up in the euro versus the dollar. I did catch both those trades yesterday, and I did enjoy them very much so. Thank you. Euro versus the pound. Euro is way down compared to the pound today. So that's going to be an interesting turn of events, and we saw that in the currency strength meter right here. Great British pound's right here, euro's down here. So that's expected to follow suit. Euro versus the dollar. I'm on the sidelines on this one. It did break there's a mean reversion strategy that I look for. If it breaks the 20-day moving average of the two standard deviation and closes above it, and then hangs out for a little while, and then closes below it on the next candle, then that sets up a mean deviation, a mean reversion strategy where it pulls back to the mean, which in this case would be down around 115.47. So I don't think it's going to go that far initially. It might over time, but so we're going to be looking for a reversal in the euro versus dollar and just waiting for our time for that to happen. Might be a week or two. Who knows? Dollar versus the yen. Well, with the DXY falling apart, here we have the dollar versus the yen coming down a bunch too. Something I want to show you right here. This is where the Iraq War started. Right here. That's where we started bombing them. Or that's where the United States started bombing them. About right there. It's got a long way to go. But it came down almost to the point where it was before that whole thing started. So we could see a lot more pullback on this. We could see it all the way back down to the open on that day, which is 97.86, which is 100 basis points. I don't know what you call this to go. So that means that the euro versus the dollar could hit 121. Then again, right now it's just kind of hanging out, biding its time. I did close out my last trade at a 10-cent loss because I'd rather be on the sidelines right now. Because the beige book will catch me off guard at 2 o'clock. I will not be in the office for that, and I'm not sure what's going to happen with that. Where was I? Pound versus the yen. And as expected, it pulled all the way back up to 213 or 212.89, almost 213. 213 is where it was before all the selling got started. Well, actually, no. It's down further than that. And right there, it's where it was. Yep. That's open at 219, 210.99, 211, call it. So it's up a couple hundred pips over the 3 weeks. Came right back down to 209, didn't it? Yeah, 209.90. So that's been bouncy, fun for everybody. There's that mean reversion setup that I was talking about. So we did have it right there in the pound versus the yen. Euro versus the yen, look at it go. It's taking off now that the Iran war is not as much in the headlines. We got a 2-week pause on that. Dollar versus the Canadian, falling apart as expected. However, the Canadian's putting up a little bit of a fight on that one. Look at that. Actually, no, it's not. Sorry about that. The dollar is still continuing to dominate in that. We'll see if that perks back up again. Canadian versus the yen right here. Again, there's that mean reversion strategy that did not work out so well because, so it's not a guarantee, but it's a good percentage of the time you are going to be able to get a little bit of a run up on that. You would have gotten 114.49 to 114.93, 50 pip run up on that one. Then I wouldn't trade the Canadian versus the yen right now, because it has broken its correlation with oil, which is right here. Oil prices are down big time. They're like a $10 drop on that. actually more of a $20 drop on that, close to $18 drop. And we need that. That's not enough to dissipate global inflation fears. We need it right back down here around in the 60s in order to dissipate all the global inflation fears. But the global inflation is not caused by the price of oil this time. It's caused by government spending, and the governments won't admit it. So that's the biggest problem is the over 100% debt to GDP ratios that are out there. Like we have in the United States at about 124%, Japan at 236% debt to GDP. And until those situations are resolved, we're going to continue to have high inflation in the world based on the actions of the local governments. And that all got started in 2020 when government spending went from billions to trillions for reasons that were not credible. And here we go. Dollar, Aussie versus the dollar. That's all my opinion anyway. It's right here. It's got the mean reversion set up right here, and a very nice run on that one. Right back up into the 700s or the 70s. Gold perking up a little bit at up 1.5% right now, up $75. That's going to be the next trade is gold and silver. However, it's still very, very whipsaw-y. Whipsaw-y. I don't think it's a word, but anyway, if it is, I just made it one. It's very, very choppy. So I don't know that I would get in on that one, especially if you're with prop firm trading. Prop firms do not allow you to let your losses run as much. Don't do that. And I just saw a video from Tory Trades over the weekend that said that stop losses do not work in futures trading because it will jump over your stop loss. Forex trading, not so much, but over the weekends it is. But it's hard to hold futures positions, not hold futures positions over the weekend, though. Here we are, platinum right here, up 5.25%. Finally, we got back over the 2,000 mark again. It's trading to resistance. We'll see how long that stays. Palladium right there, up 5.5% right there. Silver up 5%, up to $76 an ounce. I like it. I like a lot of silver. I'll probably be buying more one day. This is not that day. Here we have the software sector. IGV is up marginally. It HubSpot down 7%. Look at that. And then the rest of the big software companies falling apart. Upwork down 3%. So there's the big movers on that in that section. I just like watching that. But at any rate, that is about all I have for today. So to sum it up, we have a breakdown in the US dollar, pullback in the oil prices, and the metals are perking up. Yen crosses are split with the pound versus the yen and the euro versus the yen taking off, while the US versus the yen and Canadian versus the yen pull back. In the meantime, we've got a two-week pause in the Iran conflict, so we'll see what happens with that, see if the markets recover, or see if we finally get a deal out of that everyone can live with, and we quit bombing Iran, and then we can focus on our economic woes. So with that, that's about all I've got for today. If you have any, again, if you like this video, then hit the thumbs up button. If you want to see more of these videos, then please subscribe to the channel. And lastly, if you want to, if you want to talk to me directly, hit me up in the comment section, and I'll be glad to get back with you as soon as I realize I've got comments. So with that, that's all I got for today. You guys have a great one. Happy trading. Bye.